pensions, talking about the liabilities, a lot of cool things you can utilize that risk for. And people are realizing going, wow, I didn't realize we could do that. We're shifting so much of that stuff, that risk off our balance sheet, making it an asset. We're making this profitable. This is great. So it's one of the most exciting things talking to people because they don't realize what they have there. What they have there is an opportunity to turn that risk into a profit.
So, all right, everyone, welcome to a new episode of the Business Blind Spots Exposed podcast. I'll call it Blind Spots because that's so much shorter. But for those who are joining us for the first time or those who've been here before and listened in, let me give you a quick snapshot as to what this podcast is really all about. I've always believed that the greatest leaders are the ones who are constantly looking for the narratives that are emerging in their organization. Cultures, things that are happening in the organizations, they are happening whether you realize them or not. The more that you understand what's happening in the business, the more you can lead your company to the fairy tale ending. So this podcast is all about finding those people who know what some of those stories are. The leaders, the veterans, the coaches, the owners of companies who have been there and seen that before, so they can tell us what they see from their perspective, so you can up-level your perspective. So let me tell you what's coming up in the next couple of weeks. I've got some interesting guests, and I want to kind of finally get to Jeremy, who I've got on the line here. Hey, Jeremy, how you doing today?
Good. How are you?
I'm doing great. I'm really excited about what we're going to talk about today. Risk. It's a huge area in business. And I think a lot of people kind of focus on one or two areas. And I think we got some nuggets from Jeremy that we're going to share with everyone today. But today I've got Jeremy Colombik, seeing the data behind risk as an opportunity in business. I think so many companies I think there's two legs to a stool in business. One is opportunities. The other side is risk. And so many people focus just on the opportunity side of things, and they never bother to pay much attention to the risk, or they pay attention to risk, but not the opportunity. And I think you'll see today that paying attention to what's happening in the risk side of your business, there's probably a lot of value to unlock there in doing that. But before I let you start hearing from Jeremy, let me tell you a little bit about him and kind of why I was excited to get him on this on the show today. So he is the president of a company called Management Services International, and the industry is called captive management. He's an experienced CPA, licensed financial professional, who's worked in the captive industry for 15 years and one of the largest captives in the state of North Carolina. He's a member of the Captive Insurance Companies Association and consults with the NC Department of Insurance, as well as U.S. congressmen and senators regarding 83(1)B captive regulatory and compliance issues. So he is a noted speaker. A lot of people pull him out to say, hey, can you talk to us about this topic of captive? And, I think it's something that I have started to see a lot more chatter about in the industry. And I think just before we got on here, Jeremy was telling me a little bit of why. I'd like to kind of dip in a little bit here. Jeremy, captives, 10 years ago, I don't think I'd ever heard about captives before. But there's been an evolution where there's a lot more chatter about captives. Well, first of all, how are you doing? And tell me, why is that occurring?
Well, a couple of things. Actually, social media, the search engines, everything else has really helped in the last decade, just for people to get information. But unfortunately, that's kind of a devil's advocate because now you have all this information accessible, but it's not always accurate. Okay. So a lot of times, myself and other speakers, what we do is we like to get the right information available because captives are and will continue to be a growing area in risk management and a risk management solution. And for the last few years, especially, what's happening is that the markets are hardening. And they were hardening before the pandemic. It's only, as I told you this beforehand, before we got on, it just added fuel to the fire. And people and business owners are looking at this saying, you know what? My claims history is really good. I might not even had any claims, but all of a sudden I'm getting these notifications that my rates are going up 25, 50, 100%. what's going on? What else can I do? And they're turning to their advisors, they're turning to their property and casualty brokers, and they're saying, please find me a risk because I'm paying all these different premiums. There has to be a better way. And captives are one of those types of solutions that can absolutely help. And if it's done for the right purposes, they can be great. They're not for everybody, okay, because you are taking on a portion of that risk. The business is taking on a portion of the risk because they're going to own their own insurance company. So if your business has a lot of claims, okay, captives are not right for you. You're better off just paying the claims to those third-party traditional carriers and let them absorb that risk versus you taking it on, because that wouldn't be a very smart business decision. However, most businesses that are looking for a solution have good claims history. Doesn't mean you have zero claims. It's just that, for instance, let's say you have millions of dollars of limits. Maybe your claims are hundreds of thousands per year. That's really not that big of a claims ratio. We start getting up to 70, 80, 90% ratio of your premiums. So if you're paying $1 million of premiums, your claims are 900,000, you probably shouldn't be in a captive. You should either, if the carrier takes that, do that, and at the same time, you should be putting risk mitigation things internally in place to maybe help mitigate part of that risk internally. Because even if a cap is not right for you, you better believe the carrier is not going to not raise your rates. They're in the business of making money. So that's really why I'm real excited, and it's been an exciting area for captives, especially in the last couple of years.
So there's a couple of things I want to unpack, and there's a lot to unpack in what you just said there. I mean, there's a lot of things that you're saying there. I want to kind of pull them out. The market's hardening, right? I've heard that term, and I think I've gotten more comfortable with that term as I've heard John Doan talk about it. But my understanding of the market's hardening is there's less, there's a greater aversion to risk. Is that a right way to think of that when someone says the market's hardening in terms of insurance?
Well, insurance, really, the hardening of market is kind of twofold. One is, and it really has started hardening, as I mentioned, because of the pandemics. Because what happens is, if carriers, for instance, a lot of problems that the carriers are having is the pandemic, people are filing claims for business interruption insurance, for example. Right? Hey, my business is interrupted. I can't work. And the carriers are like, the traditional carriers are like, well, we didn't price those in our policies. There's an exclusion. So we're not going to pay it. We're deny it. And then you had a bunch of states that said, no, we're going to take you to court and force you to pay that. Now, if that's the case and these carriers lose, what's going to happen is, first, they're probably not going to write any more business in that state, so they're going to pull it out. So now you have less carriers in the state, so that's hardening. As well as, let's say they're forced to do it, the carriers are just not going to say, hey, we're all done, we're packing it up. They're going to have to get their money back. So how are they going to get the money back? They're going to increase the rates. Now, what that's doing is all the other people in that pool then are saying, okay, I have less carriers to work with now. Well, that's not good. And the carriers I do have to work with, they're going to increase my rates. So that's generally what it means when you're talking about hardening of the insurance market.
Now, give me something that I've started to appreciate more about the insurance market that I don't think, at least I didn't understand before. It's kind of how the whole ecosystem of insurance works. I mean, I know about Allstate. I know about Liberty Mutual, State Farm, these gigantic companies that are out there. But, just for commercial vehicle insurance or E&O or EPLI, there's lots of different people who do personal and then they do commercial. Mm-hmm. They don't insure everything. They only do a very, very narrow set of things. And if you fall into that small little square hole that they have, then you fit nicely and neatly into it. That's good. But fact of the matter is that most people don't fit nicely and neatly into that hole all the time. Is that a correct understanding?
It really is. They definitely operate in a box. Most traditional carriers do. And again, there's nothing wrong with it. They just know it makes them comfortable. They know how to make money in that. However, they're going to have to start getting very creative because a lot of people do not want to be in that box anymore because they're getting burned. And they're looking for more of a circular solution, which captives come into play. And the reason for that is captives have a lot more flexibility than traditional carriers do. Traditional carriers might have some standard policy language and they have a lot of exclusions or gaps. As I always tell people, no one really reads their insurance policy until they have a claim.
That's right.
Right? And then they look at it, they have this one page, which is a deck page, right, that shows all of your coverages, and then there's like 50 pages of exclusions behind it. And with a captive, you could tailor those languages and make have less exclusions, so you have a higher premium because there's a higher amount of severity and risk done with that. But at the same time, you have clients then that said, you know what, if this happens, I know it's going to pay. I know that I'm not going to have to argue because I helped write the policy. And now that might cost me a little bit more, like a premium. But as I always tell people, a lot of times you get what you pay for. And just because you get something for the cheapest cost, it doesn't mean it's worth the paper it's written on. And it's really important when you're looking at types of insurance.
So something else that occurred to me in the past, or sort of the light bulb moment for me, was when I realized that, all right, so I'll call the well-known carriers, right? They have this square kind of hole that they create, right? And you may get some coverages from that. But if you're in a business that has some unique needs, which I think is pretty much everybody, because no two businesses, even in the same exact business, are exactly the same. They've got a different profile of risk, right? They do different things. They have a different culture, different people, whatever the case may be. So that square box or that square hole, right, will only fit certain needs. Now, what a captive does is says, well, let me tailor this coverage plan to what really fits your company. So the risks that are unique to you as a company are now being considered as opposed to just this. Am I saying that the right way? Or
Yes,
can you give an example of what that means?
Yes, it has come down to, again, as I mentioned just previously, tailoring of the insurance policies. And that's exactly the point. You have businesses do have some common risk, right? Just about every business in the world has a cyber risk, right? It's just we're in search engines, the clouds, all that stuff. However, tailoring that policy to your business can be very important. And a traditional carrier cannot do that as well as a captive insurance type of carrier. And there's also certain coverages that are not available in the traditional market that are available in the captive market. And that's why a lot of people seek that. And people asked me before, well, what was an emerging risk? Well, HEP insurance was an emerging risk, okay, with captives. Actually, captives were doing cyber risk policies. We were doing cyber risk policies 10 years ago. 10 years ago, where traditional carriers weren't even really dipping their toes in the water. Now we have pandemic types of coverages. And then people say, well, the pandemic's over. And that's great. I hope it is. But let's say something like this happens in the future. People are now looking at it and saying, you know what? Those communicable diseases that are excluded in those other policies, well, I want a policy just for that. Well, the traditional carriers aren't really going to offer it. Captives are. Okay? And that's just an example, a little bit of example, because people ask me all the time, well, what's not covered in the traditional market? And I said, well, besides a lot of the exclusions or gaps, there's other policies that are not offered, or they're really offered now in a small type of fashion because captives were pushing that type of market, insuring those before really the traditional insurers came on board.
Well, I think the phrase that you used that I was searching for to describe what I was kind of trying to get out there, and I didn't know, and I appreciate you doing this, is this idea of common risk, right? There is some common risk that all businesses will have, especially in a market or across industries, right? But these emerging or tailored risks is what a captive really touches. So it's not and or it is a complementary way of thinking about your risk. Is that now you can get something that works just for your business, tailored, as you're saying.
That's exactly correct. Absolutely. And just to kind of even clarify a little bit more to your thought, this isn't a one-size-fits-all. It doesn't mean you're replacing all of your commercial care coverages. That's not correct always. A lot of times I always tell people a good blended approach seems to be the best scenario for the client because you get the higher limits really with the traditional carrier, and you get a higher deductible, for instance, through the captive by pushing some of that risk inside the captive. So again, it's not a one-size-fits-all. It's not like we have to replace this. It's just a lot of times clients will like to, hey, I need a blend. If I increase my deductible to $250,000 or $500,000, That generally in a premium could reduce their premium the patient paying to a traditional carrier 40 to 60%. And they could push that over to the captive. And now they get to take on that portion of the risk. And if they have those lower claims that they had in the other years, now they have a profit center. So again, they're taking that risk and they made it profitable.
So the analogy that comes to mind here is very early on in my professional career and started working after coming out of college, I was renting. And the problem with renting that started to bug me is I'm paying $1,000 a month, $500 a month, whatever that number is. I will never see that money ever again. So about 2 years after college, I was like, oh, gosh, why am I just renting? I'm never going to see that again. I'd rather find some way to keep seeing that money or build some equity there. So I went and bought a condo. However many 20 some odd years later, I still have that condo, and that condo has built equity for me. And I feel good about that because, sure, is my bill a little bit higher than what it was than if I were renting? Yeah, slightly more. But gosh, I've got many thousands of dollars of equity in that and now multiple properties. And I think that's sort of what you're offering here is this opportunity instead of just writing a check to someone that's going to give you just a standard set of common risk, right? I now have this ability to say, I'm going to get something out of that. Am I thinking about that the right way?
That's absolutely correct. You're having less risk and more profit. Okay, more profit because you're creating that profit center. Those underwriting profits, right? That equity you got versus a canceled check as you put it out. When you're paying premiums traditional carrier, it's like renting, to exactly your point. To your analogy is, I get a policy, and then when you're done, you get nothing back. And if you do occasionally get some type of refundable premium or credit back, it just shows you how much money the carrier's making. If they're offering you a little bit of that money back, they're not doing it out of the kindness of their hearts, really. They're doing it because they're saying, oh, look how good this is. We're going to charge you again because you made so much money. But imagine flipping that script and saying, you know what? I've done really good this year with my risk mitigation, my company. I had lesser claims, and now that underwriting profit, now it's mine. And now in your own insurance company, you're making those investments. It's not like the money just sits there in cash and gets you zero. You're running an insurance company, and you have an investment policy, and these investment policies have to be approved by, obviously, the domiciles that you're in. But the domiciles that you're in, they're going to allow you to have some investments, obviously, in publicly held companies, maybe some real estate, depending on the amount of liquidity that is needed based off of your risk, right? Because an insurance company is there to pay claims, and you obviously have to have enough capital and surplus, which is just profits for an insurance company, to pay those types of claims. But a lot of people love that exact idea because they're building up this great profit center, and they can always use that. A lot of captives during the hard pandemic times, were using that type of equity in their insurance companies and taking out dividends to help their businesses, or leveraging those in different types of investments in order to keep their companies afloat.
So here's what I love about this. Amazon did a fantastic thing. I think they're most famous for doing it. They had all these servers and excess capacity just sitting there. And they decided one fine day, I'm sure it took more than a day. They decided one fine day, we've got all these web servers. Why don't we sell this excess capacity to somebody else? And now it's the biggest profit-making center within Amazon, and it's a massive company, right? They've got this excess capacity. What I'm hearing here is you can keep, for the next 40 years of your business or whatever else it is, you can just keep writing that check every single month and have these potential emerging risks or custom risk that will come at you in your direction, and you have no protection for them. So you're just going to have to write a check for it. Or you can shift your mindset, shift the way you believe, you think about risk, where you start to say, I'm going to start to invest in that risk and start to build some equity there. So I actually build a kitty for myself over time. So over the next 5, 10, 15 years, I now start to build a little bit of a cash kitty over here from this risk that I have built as a tailored solution. That, look, if you have a rainy day, you've got a bunch of money that you've set aside, you've built over time, but it's come out of what you've now built as a profit center, as opposed to just the fact that you've just kept writing a check. Am I thinking about that the right way? Is that the way a business leader could think about their company and captives?
That's not only does or do business owners think about that? That's a lot of them are doing that. As I said, and I've always told people, most Fortune 500 companies have their own captive. They're the smartest, biggest companies in the world. It's interesting how they have their own insurance companies, isn't it? They took the control of their risk, and they're making more money on that. Now, that's obviously helping out the shareholders, and everything else, the nature of those companies. Been doing this for a long, long time. It's just that a lot of small to medium-sized business owners, I always talk about people grossing maybe $1 million to $250 million per year. A lot of them didn't realize you can do this. Yeah. To your point, 10 years ago, you're having these conversations, and it's like they're glossy-eyed. They have no idea what you're talking about. What are you talking about? You sure this is in the law? Yeah, you're allowed to have your own insurance companies. I didn't realize that. And as I said, more and more people now are utilizing captives, and it's very much becoming mainstream. And it's not. And then you have people that love them so much that says, you know what? What other types of risk can we do? Medical stop losses, pensions, talking about the liabilities, a lot of cool things you can utilize that risk for. And people are realizing, going, wow, I didn't realize we could do that. We're shifting so much of that stuff, that risk off our balance sheet, making it an asset. We're making this profitable. This is great. So it's one of the most exciting things talking to people, because they don't realize what they have there. What they have there is an opportunity to turn that risk into a profit.
So, that word is perfect for what sort of segue in terms of what I was thinking here. Right? As I said, it's kind of at the top of our conversation. I think there's two legs to the business stool, right? There's opportunities and risks. Most people think in terms of opportunity, business development, and sales, and that's where I'm going to grow my company. And look, I've just got a bunch of these risks I've just got to tow along for the ride throughout the course of it. And it's just going to keep escalating as I increase the size and scope and scale of my company. But what I'm hearing here, or what the opportunity is here, is to change that risk into an opportunity, right? Don't drag it along. Turn it into a profit center, right? So everyone else is thinking opportunity and risk. You're thinking opportunity and opportunity, right? I mean, what a fantastic way to think. Why don't people do this? Why don't people? This seems like a no-brainer to me. Why don't more people do this?
A lot of it's a great question, comes down to education. And I always tell people, my big line is, whether you buy insurance or not, the risk is still there. Mm-hmm. It's irrelevant. You can choose to buy insurance or don't buy insurance. You still have that risk. Now, unfortunately, a lot of people didn't believe that, and they went out of business last year because the pandemic hit. And they were self-insuring that risk, right? Because if you're not buying policies through a captive or a traditional carrier, you are self-insuring that risk. Okay, you are. A lot of times, businesses can take money, put it to a side, and earmark it, and that's better than doing nothing. But a lot of times, it's not that efficient. You might not have enough. And also, at the same time, most business owners kind of greedy, right? You want to sit there and go, do I want to buy a policy? And yeah, I get a deduction for it, and I know what it is, but I'm not really sure. I'd rather just kind of pay my taxes and take it and go buy another house or invest it or a boat or something, whatever it is. And then it comes time where, hey, that risk happened, and they're scrambling, and then they're going through their policies thinking something's covered and it's not. And that's real important. I think a lot of people now are stepping up, especially after this pandemic, saying, okay, you know what? No one thought this was going to happen. And if this can happen, what else can happen? And now you're having a lot of people ask more and more questions. How can I get this covered? And even people who've never heard of captives before are learning very quickly, not just from one or two people, not just from asking maybe a colleague or a friend or a lawyer. Now you have the actual brokers saying, you know what? We have to come up with a solution for our client. We can't go back to them from our traditional carriers and say, hey, by the way, we got some great news for you. The great news is we got you insurance. The bad news is it's going to cost you twice as much. And the clients can go, that sounds terrible. He's like, well, I got you insurance, though. And they're going to go back to him saying, well, you either got to come up with another solution. This is too expensive for me. And that's what happens is you have now these brokers coming in saying, you know what, we have a solution for you. And there's another myth almost I like to talk about is that like a one-size-fits-all with captives. I've had people tell me, oh, I'm not big enough. I heard I'm not big enough for a captive. I'm not doing, 10, 20 million, or I'm not this multi-billion-dollar company. And I tell people, so that's false. There's so many different structures of a captive. You have pure captives for large companies. You have protected cell captives for smaller companies. You have group captives. And then you have hybrids of these. So you have different people create different hybrids to help different areas of the market. So that's why I said before, captives are more of a circle, not a square. And it's not a one-size-fits-all. And there's so many different things that people can do with captives. And you have different managers and experts creating different strategies to adhere to the market and what the market is really demanding. And what the market's demanding right now is a risk solutions. And captives right now are on top of people's list.
So one of the things I appreciate about MSI, your company, is that captives, like you said, were previously only available to the really large companies, right? And you've brought that down to where a company that might be $1 million in revenue, $1.5 million in revenue, I would say the smaller enterprises now have access to that. How have you found that? I mean, that's a huge opportunity. You don't have to be $10 billion to self-insure. It's the small business that does garage door installation that's got 15 employees. They now have the capability to do that now, right? They have that access by MSI, right?
Yeah, that's absolutely correct. I mean, our firm and a couple other firms really do offer different types of solutions for those types of smaller, profitable business owners that did not think they had the accessibility to get that based off of our proprietary or hybrid models that allow those clients really to have access to that product, because a lot of times you have these business owners and they'll say, hey, I have a budget premium of like $100,000, and they'd go to another captive manager and say, well, this is going to cost you $60,000. And you sit there and go, well, why would I really do that? It doesn't sound like a great deal there. And it's really not for them. But we do absolutely offer different types of tailored solutions, anywhere from those small business owners all the way up to multi-billion-dollar companies, depending on really what they're seeking and what they're looking for. And I like that, to be able to offer that kind of variety of services.
Yeah, I'll tell you, I work for lots of large multi-billion-dollar companies myself, right? And yeah, that's fun. It has its place, but small businesses kind of get closer to the heart here, right? That's really what drives, in my opinion, what drives this country. So being able to do services for smaller companies is actually a lot more interesting for me. And it sounds like for you as well.
I do enjoy it. A lot.
Yeah. And you get to talk to a lot of interesting people along the way.
Yes, we do. It's very interesting. Every year, I always think that I've met every type of business, because we've been doing this for a long time. And every year I'm very surprised about these different types of businesses that have been created. Sometimes brand new, sometimes been around for a while, of what they're doing. And it's real exciting to sit there and learn about different businesses and how they did that and why they were even created the idea. So I think it's very exciting stuff.
Yeah. So what is the thought process? So look, I've started to realize that I'm kind of getting wiser here, I think, at least. As I'm getting wiser here, that's kind of how I feel about things actually matters a whole heck of a lot, right? How I feel about my business. So with that said, how are business owners feeling when they start scratching their head going, there's got to be a better solution? What does that journey look like from where they first feel to where they had that first conversation with you? What does that look like?
I wish I had the smiley face chart. You know that smiley face chart which says, how do you feel from 1 to 10?
Yeah.
You have those emotions. A lot of times that's really how they feel. You have these business owners who, a lot of times we might not even talk to them first. We're talking with their advisor, we're talking with their broker, and the broker's saying, you know what, my client, which the brokers and these advisors know the clients a lot better than we do. We're asking for information just to analyze it. And you can tell from the broker's point that they're coming to us almost, I don't want to say like they're white, but they're like, we got to come up with a solution. I've had this client for a long time. I need something. They're really wanting me to do something. They're afraid that they're going to leave them and go to someone else to give them that solution. So I actually have more of the scared advisor, versus this happy advisor that's at the end that says, oh my goodness, what you told me I didn't think was possible. And then I saw this and I went through this. I can't believe this. This is amazing. I have a lot more. And now they end up having, I think, an edge in the market, regardless if it's a broker, advisor, whatever, that says, you know what? I have now a great solution to offer, and I'm going to not just retain clients. I can probably get referrals from my clients and go after some other clients because I know that solution's available. And I love talking about it because you have people saying, I heard about this. I never thought that was possible. Then they go through everything and say, I can't believe I wasn't doing this earlier. What was I doing? Why didn't I hear about this? And what you really have to tell people is, hey, it's a lot of stuff has come down to education. Risk, by the way, changes every year. It's not just it's always the same. Your business can evolve. Your business can evolve. Then you have your risk can evolve. Or something that was really risky to start maybe changes over there. And you really have to look at it in a year-by-year approach.
So I love my analogies if you hadn't figured out already. And I'm gonna kind of stick with this whole rental versus owning analogy here, right? What my needs were when I first was a single guy out of college. I wanted a bachelor pad, right?
All right. Right.
My requirements were a little different than when I first got there.
Different risk.
That's right. That's right. Different profile of risk. So then I kept that, and I said, all right, well, that takes care of some things. Well, we moved into this new property, right? Well, a different set of risks. And the underlying theme here is there's a discipline to be able to pay those bills, right? And I can manage that, what's happening. So as you evolve as a business, the captive starts to evolve with you in terms of some things go up, some things go down, new things start to pop up. So it's not hey, you set it and forget it. You keep reinvesting in understanding what the risk is for that company as they evolve. So it continues to grow with them and kind of builds that right roof over the right heads at the right time. Am I thinking about that right?
You're absolutely thinking about it correctly. It's I always tell people, stick with analogies that you're comfortable with. It's right. You're absolutely correct, because what happens is you might start off being able to insure, let's say, $1 million for 8 policies, and you might have what's called a 3x, which is 3 times the maximum of one policy, or 5x. And as your profits are growing, right, going up like this, and what that allows you to do is now you can maybe take on more of that risk. Because before you might say, hey, I was only up to around $1 million. Well, maybe now I could take on $1.5 million. And by doing that, you can then allow more risk on because you have that control and those dollars available. Okay, and you can also change up your coverages, which happens a lot anyways. It's not you have one actuarial and you're done. It doesn't work that way. Things change. Pricing changes. Have you had claims? If you didn't have claims, maybe you're getting charged too high, right? Because people don't realize when these actuarials are getting run, well, they're getting built in their operating costs, losses, everything else. So if your losses, which is great for you, are like this, going way down, well, that means your pricing probably has to get adjusted, which also means that you might be able to have a more flat level of pricing for the traditional market that goes like this. Up and down, sideways. And that stabilization of premium is very important to clients.
Yeah.
Clients don't like the up and downs. They like more of a flat type of line of approach, and you can absolutely have more premium stabilization in a captive.
That's funny because I this always seems to fall in deaf ears for some reason. Maybe you'll get some value out of this, but I've always said the worst thing for a business owner is surprises. I don't ever want surprises, and I don't ever get anybody to just go, yeah, that's so right, Vinay. That's so profound. I don't ever want to be surprised. I don't want my employee to come to me and say, so that $1,000 job actually ended up costing me $5,000 to do. Well, don't surprise me like that. And I think you're saying the same thing here, right? There's an opportunity to start to mitigate the surprises that occur to you in terms of the risks in your business if you start to manage them properly. And I think that's a really powerful tool.
I absolutely agree with you. What always surprises me is you have these business owners, and one of the riskiest things to do is start your own business, which is extremely risky. But we don't want to mitigate any of our other risk.
That's right.
This intense thing to do. I always tell people, I'm not saying you should buy insurance in every single type of thing. but at least get the big things that are the biggest risk to you, some type of coverage put in place, because you're taking on a lot of risk to start your own business.
Yeah. So, as I start thinking through this, I think captives make a lot of sense to me, at least in terms of being able to tailor your ability to cover the various risks for your individual business, right? How does someone? So I actually like stories. I'm still a kid at heart, I think. Tell me a story. Give me an example, maybe one or two, of companies that came to you, and what did that innovation that you all were able to develop for them, what did that look like? So someone can kind of get a little more concrete example of what this all means.
Sure. We've had, I'll give you a story here of a client of ours owned a bunch of dental practices, over 20 of them. And they had a business interruption policy with the traditional carrier. And we ended up getting them an additional business interruption policy to cover some exclusions or gaps in their policies. And they had a bunch of other coverages with cyber, reputation, everything else in nature. And they're on the coast. And what happens? A hurricane hits. And the hurricane hits, and they call us up. They say, hey, we probably have to have a claim. I said, okay, hey, no problem. And they call up the traditional carrier. And they call us back and they say, you know what, I called my traditional carrier up. And they said, since I don't have any physical damage, my claim's denied. Business interruption. But all the power and stuff's on. I can't open my offices. I'm losing hundreds of thousands of dollars of revenue in a week. More. I say, guess what? Congratulations. Our policy covers that. Because it doesn't just cover physical damage. And this client was extremely thrilled. We unfortunately had another one of our clients that didn't listen. And another hurricane hit, not the same client, different one. And they weren't covered. And they said it was the biggest mistake they've ever made. And last year we had a bunch of clients in different types of industries. We have obviously pharmacy companies. They have big supply chain interruption, not to mention regulatory type of changes with the shutdown of the state, as well as business interruptions, furniture stores, financial businesses, all were getting interrupted by this pandemic. And guess what? Their policy doesn't have those exclusions. They're paying claims. We were saving businesses. The New York Times, I believe last year in March, had a great article how captives were really holding their weight, for the U.S. and helping to save a lot of businesses. Because in my estimate, hundreds of millions, if not billions of dollars were paid out through captive insurance last year. And I can't say the same for the traditional carriers. Not that they did anything wrong, it's just that their policies were priced not to have that pandemic in there, their exclusions. So that's just a story. We have a potential new client that came to us that owns a very successful business, and they're more in buses. And they were having really high rates, just as I talked about this hardening of the market. And they said there has to be a better way. I said, okay, let's do a high deductible policy. Let's push that risk into your own captive because you have good loss history. And they loved it. They didn't think it was possible. And they said, you know what, we can't do that with our traditional carrier. I said, no problem. We have a solution for that as well. We have a A-rated carrier that we work with. And between the A-rated carrier and their captive, they're having their problem solved and saving hundreds of thousands, not millions of dollars per year.
Wow.
And they can't be more thrilled about that type of stuff. And we're doing a lot more of those. As I mentioned before, what's a great approach, a great blended approach is working with those rated carriers and also offering this client to take on a portion of the risk to the captive.
So I'm going to try another analogy here, right? It's going to, I don't know, what is the department? You go into Macy's and you buy sort of a suit off the rack, or you get a bespoke suit, right? One just makes you look so much better, right? And you guys build bespoke suits, right?
And we tailor them for you too.
Yeah. As you put on the
pound,
we put it out for you. So one of the things that's sort of occurring in my mind here is I don't know. So we call it business blind spots exposed, right? I don't know what my risks are that I don't know because I've been trained to always think by the off the rack Macy's, and I've got no problem with Macy's. It's just that they're not tailoring it for you. When I go to a commercial carrier, or any carrier for that matter, they're going to give me that box approach. I don't know what exists outside of that box because there's nobody who's telling me that. And what I'm hearing here is that nobody can really tell me what that is because I'm unique and I need a tailored solution. How do I figure out what I really need? What is that? Is that a discovery process? Is that just by you guys asking us questions? You kind of throw, here's a couple of ideas. What does that look like? How do you guys figure out what those risks look like?
Sure. I mean, no one really, a lot of people don't know all the risk, right? I always say one of the key components is called increased risk awareness, which is just educating, right, brokers potentially, or even businesses about risks they were and were not aware of. And even if they were aware of the risks, were they aware of that certain type of severity? So what happens is a lot of times there's brokers involved in these business owners that are selling them certain type of coverages. So a lot of times brokers do a lot of the work. They'll go in there and they might try to sell them everything, but at least they'll go in there and they're supposed to kind of analyze the business. Hey, your business does a lot of supply chain, or your business is really heavy into tech. You need cyber type of policies. You have a lot of employees. You need employment practices. You have directors and officers. So what I'm trying to get at is some of these kinds of risks, a lot of people know about. A lot of people have heard about cyber risk or directors and officers. A lot of people have not heard about what's called a reputation expense policy. If a lot of carriers are like, we don't offer those. Well, nowadays, I think people's reputations are all the time because of the web can get slandered on. It's terrible, but it's reality.
Yeah.
And the way to do that is a lot of brokers help. A lot of people, I think, should be going to these captive websites just for educational ones. I mean, we have one. A lot of other people have them. You can go to a lot of industry third-party sites, the captive.coms, the Captive Internationals, Captive Reviews, and they have great information about captives all over the place. And we have people a lot of times saying, hey, you know what? What's offered? And we give them just a one-page sheet of the top 50 because there's hundreds of risks available. But I would say the most common ones that people really should think about are the cyber risk, the directors and officers. The employment practices is very popular, wrongful terminations. A lot of people are worried about the Me Too suits and everything else. Contract disputes is real popular. Business interruptions, of course. Regulatory changes where the regulatory bodies of the states shut them businesses down. These are some really important ones. We obviously have regulatory investigations for clients of ours that a lot of times have to do with the investment world, with FINRA and everything else. Doesn't mean they did anything wrong. It's just they get investigated, kind of randomly, or same thing with doctors. They can get random audits. And it doesn't mean they did anything wrong. They're just getting audited because they're going through Medicare, Medicaid, and they have to shut their office down. And that causes them to have a loss. Now, they might get some of those back from rebookings, and that comes in the equation of analyzing their claim. However, unfortunately, I can't say that you call somebody up and they tell you all your risk. What we do, even if you called us, we'd say, okay, well, do you have policies? Let's look at your policies. Please fill out your risk assessment form. Are there any risks that you're aware of that you really want to look at? Because we might analyze and say, hey, you know what? This risk you better look at, or these few risks. In addition to these other risks, these things you might want to look at, and you might say, thank you for telling me I don't want that type of coverage. You might say, you know what? Let me get some coverage on that. I'm not sure. But at least at that point, you're made more aware.
Yeah, I'm kind of thinking there's kind of going back to this analogy of sort of the common risk out there is there's a net, right? And that net will only cover certain things, right? So what you all do is you start to take a look at all the nets that they've patched together and say, well, here's the gaps between the nets, right? This is where you could potentially fall through. And if you all can start to see that picture and start to weave that picture together for them, you can say, well, look, here's a little section that you need to have some coverage in that, look, your 20 dental offices could be shut down because, hey, hurricane's going to come through and knock out all the power, and the insurance, the common risk carrier, the standard market carrier, is only going to cover it if, the hurricane actually knocks the chair over. They don't care if the power goes out. So that is a safety net that you can build, and that's tailor built for your company. So that's what you all do, is you take a look and start to try to understand the holistic picture and where are the gaps in that picture. That's what I just understood. Is that right?
That's exactly correct. You have to. You can't just magically have a number out of thin air. People, just like anything, might have a budget. They might say, hey, my budget's 100,000, 200,000, $1 million, whatever it is. That's different. Yep. But no, we have to sit there and say, okay, what's your budget? What are you looking at? Let's do an analysis. And what I mean by what you're looking at is, do you have a certain limit you want to insure in mind? Some clients might say, I don't know. I mean, maybe, what do you think? And we'll say, well, and that's where you have to dig into the numbers. How much is your business generating? How much is this and that? And then we can make recommendations to the client. And the client then can say, hey, you know what? That sounds good. Or no, I don't want to do that. I'd rather have more coverage than this.
So there are, one of the biggest challenges that I had when I start going and looking for services, I don't have a good measuring stick because, look, I've always said that people use price as a measuring stick for making a decision when they don't understand the true value, right? So if somebody comes to you or they go to any captive, how do they know that it's a good value for them? That they're going to get some juice out of that squeeze?
Right. I like that how you quoted that from the movie too. Basically, what happens is a lot of people nowadays are doing a lot more research. So they'll call up a couple managers. They'll ask, what's your pricing? Here's what I'm looking at. What type of captives do you offer? And what we always have our clients to do is we like to have them fill out some type of questionnaire, some information, because a lot of times, we can sit there and talk to a client and go, well, we don't know what business you're in, what you're looking at. You're asking, there's different prices based off of different structures. And until we get more information, we're not just give you random numbers because different things cost. You might fit in, solution A or solution A and B or A, B, and C or just A, or you might not qualify at all. We've had clients call up and we'll ask them, hey, how's your loss history? It's terrible. We'll say, don't go into a captive. This is not right for you, as I mentioned earlier. Don't go into the captive. Get your losses under control first, and then look at that and keep getting your other policies, because the captive is not going to make sense for you.
And I think another subtext I'm hearing here is that if you're talking to a captive, if they're call you up and or talking to MSI about, hey, can you guys help me understand the bigger picture of risk that I have and what are my gaps? If they're holding out key pieces, as in they don't tell you the whole story, you won't be able to find where those gaps are. So when you're talking to a captive coming in saying, here, let me just show you this little piece. Well, I need to know all the stuff that's over here too, right?
Yes.
You truly have to invest in telling the whole story so that you can assess where the gaps are.
That's exactly correct. We can't work off of, what ifs or haves information. We really need to see the whole picture, just like any manager does, to get the information to offer a solution. Because if you're not giving us all that type of information, something's not going to add up when we're looking through it. We start asking questions on that. And that's really important, is getting all the information, getting on the phone with the client's team, and let the client know, hey, we're here to help you, but we are going to have to know all the information. And if you can't provide this to us, this isn't going to be a good fit, because we're not going to provide you a recommendation without fully going over all the information.
So I've been jotting a lot of notes down here, and I see we're kind of getting towards the tail end of our time here. I wanted to summarize a little bit of what I've distilled and maybe get some of your thoughts or reflections on that. We started out with this analogy of renting versus buying, right? And, for me personally, it was a choice. I decided I don't want to keep writing a check and just seeing that it's clear. I actually want to build some equity in that. So if you as a business owner or leader want to say, I don't want my risk to be something that I just continue to rent coverage for, I want to actually build some equity and I want to start to own that risk, there's an option for you. It's called captives. there is some complexity in it, right? But it's an education, right? And that's exactly what you, Jeremy, and what MSI do. So if you want to take a shift from having opportunity and risk in your business and you want to turn it to opportunity, I think it might be a game changer in terms of how you can run your company and how comfortably you can run your company. So assuming all of that, what I just said there and I summarized is true, what are one or two things that you wish more companies would know when they walked in the door or picked up the phone to talk to you?
Well, first, a lot of times we would like, and I can't speak for everyone in the industry, but I pretty much think this is the education piece. We're obviously happy to help educate people, but most captive managers have great starting off informations. We have great videos that we have right on our website that just talks about, is this right for you, misconceptions, that type of information. Unfortunately, I think a lot of people get lazy with research. And they just, so I would actually say, go to the captive manager sites and not even just trust the captive managers. Go to independent association sites. You know, you have Captive Insurance Company Association, which is SICA. They do a great job. We have obviously some North Carolina Captive Insurance Company Association. They do great jobs. And you have all these other independent parties, these captive.coms, captive reviews, industries kind of staples that put out this information from third parties all around the world and all around the states, from lawyers, CPAs, actuaries, about things that are going on. So what I would tell people to do is start with those, get some initial information, then come to a manager saying, hey, you know what? I read up, I know some basics. That's all we want. Here's kind of what I'm looking for. Can you kind of help me point in the right direction? Versus you almost have somebody coming in to buy a car, not knowing what they're looking for. I want a car. Are you sure you want a car? I don't know. You know, and you're like, well, you know, I'm not here to, you know, someone wants to sell you a car, but do you really need the car?
Yeah.
And it's almost the same thing as, hey guys, look about some certain basic information because captive might not qualify for you. And then if you're not certain, you can absolutely call a captive manager up and ask. But I would say have people do some third-party information that's vetted, because if you hit the Googles, you get stuff all over the place. Those sites, those are great things to go to because they're not from any one manager. They're from independent associations that help lead the way for the captive community, which is a huge community. You're talking tens of billions of dollars per year. Our premium are going into captives.
And just for anybody who happens to listen in, I'm getting a little bit of feedback here. I'm not sure why. But if anybody is listening in, I will publish some show notes with links to MSI so that you can actually go to their website and see some of those videos that they have, should you be so inclined or interested. Jeremy, what else? Is there anything else? I mean, having a good educated customer is always of great value, so they can be discerning. Anything else that you wish they knew walking in the door, or questions that you wish they would ask?
A lot of them are questions I think you addressed, which is great today. Why haven't I heard about this before? I heard some negatives, I heard some positives on captives. Really, you know, going over and addressing those. You know, I've had people ask me, when should I not do a captive? And as I said on the show today, if you have really bad loss history, do not do a captive. Don't do it. First, get your claims and things under control. Then look at that solution, because it will not make really financial sense. Yeah. So I think, you know, a lot of that type of information. And again, it's just knowing some types of basics. And a lot of times you like to have the clients come in with their advisor or their broker. That way you have the parties there that can make the decision. I'm not saying it's a rush decision, but at least you have the parties there that says, okay, do you make the decision for the company? Well, I'm doing some research. Okay, here's some research. Why don't you get the person on who makes the decision? You know, that way I always tell people is we don't want to waste anybody else's time like anybody else. But at the certain time, you want to be able that if you're just trying to get certain information, honestly, we'll point you to our website and other websites to gather that. And then when you're more serious and if you want to get some more detailed information in order to get that to the person or persons that make those types of decisions, then let's have those phone calls.
Gotcha. Well, it's really difficult for me to see sometimes in terms of how many people have been listening in. I appreciate anybody who has been listening in. Hopefully you got something out of this. I think captives are, not only has Jeremy told us, it's kind of a hot space to be in right now, because a lot of people are starting to realize the markets are hardening and they're starting to feel that press already. And captives are a release for that. Hopefully you got some value out of listening in, and even if you listen to it on the podcast later on. But so thanks for listening in. Jeremy, I appreciate you taking the time and walking us through some of this stuff. I mean, there's a real opportunity here for people that some people may have heard of, they may not have heard of at all. And I appreciate you walking us through what that all looks like.
Hey, my pleasure. Appreciate doing this. Love doing this type of speaking.
And what is the best? I'll put all the stuff in the show notes afterwards that I'll get out to. And what is the best way to get in touch with you all if someone does start to see that a captive is the right direction for them?
Absolutely. You can go to our website, which is just www.themsicorp.com. Click on some more information after you look through our videos. And next, we also get through with us 833-INS-RISK. So give us a call. We definitely will have one of our executives or one of our salespeople on there to answer any questions they may have. Super.
Well, thank you much. I expect to have this out on, this is already live on YouTube and LinkedIn and Facebook. I expect to have it pushed out to all of our podcast channels in probably the next 48 hours. And show notes will be released probably in the next 72. So thank you all for listening in. Thanks so much, Jeremy, for taking some time to share with us.
My pleasure. Appreciate it. Thank you.